All right, good afternoon, everybody. Let's do it. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRecipic. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I got back very small into Blue Apron. Trying to get back to the prices I was looking at. What's HLX? Never heard of it before. Matt likes it. Technicals look really good. I think good pricing on the entry. It was a good trade today. And everything else is kind of the same. Position management, market just isn't really giving me the signals I'm looking for to get heavy on certain stuff like I want to. I guess while I have the 5-minute chart up, we can kind of start with this. 5-minute chart. There it is. Really nothing to talk about with this 5-minute chart. Extremely boring. Extremely boring. Nothing. Little pop early on. This is what I was more looking for today. Kind of just with where the market is, and it just died and did nothing. And I would argue that this is more bearish than bullish. Going back to the daily chart, is that tail high real? Is that really how high we bounced to? 415.42. What's this high? That is interesting. It's still like, I guess, a little bit of a wider ranging day than this 5-minute might indicate. That's because probably yesterday's move was so big with the gap. Even yesterday's move was mostly gap. But anyway, back to the daily chart here. Yeah, I was really looking for an update today. A little bit surprised that we didn't get it. We did still hold 410. We didn't really test it, so that's the other thing I said. I'd be very surprised if we broke 410 today. We still kind of held that, but like I just said, as far as the market goes, there's nothing there. With that said, I mean, morning meeting was on point. I came into today extremely bullish on energy for continuation after yesterday's candle. We talked about it in the morning meeting this morning, and I was really just loving a lot of the charts that I was looking at today. $78 is a really big level. We discussed it. We had a great trade Thursday last week for anybody who caught some of those names like COP and DVN. Friday was a little bit of a rest. Yesterday was a very volatile day for XLE. But at the end of the day, it was solid. It still kind of closed green. It was relatively strong. But I love how they possibly shook out some very weak candid longs. We're maybe using $78 as a stop just to create a tail into equilibrium and still close well above that $78 level. Like, really love this candle here for market continuation for XLE. So this is really what I wanted to kind of be my number one focus. I was also looking to see if we could get a little bit of a bounce in growth stops. Can talk about that after we talk about energy. And this was just, phenomenal follow through. Potentially a little bit difficult to get some stock, but I was buying Apache pre-market. Apache paid me really well. I ended up closing the position just because I got such a big move out of it. I closed it. I figured, let me reassess. This is a really big move here for Apache. Even coming $1 plus back off highs, it's still a 5.5% up day. I had really good pricing pre-market. I was buying pre-market. I bought below the low of the day. So the flip side, I guess I can get into my frustrations in a second if you just want to talk about me. As I never got the opportunity to get heavier. I had just the worst timing on a software freeze at like 9:35 today, which just I've never been. It's honestly one of the most frustrated I've been in a really long time. There may have been some 4-letter words shouted that are not supposed to be said when I'm on the radio, but I wasn't on the radio because I had to turn it off because I was just dealing with a little bit of a disaster there. So still did really well with this Apache and didn't get to be as heavy even as I wanted to. So that worked out really, really well. Another one that I made pretty good money in and still felt like I missed, so I hope some of you guys caught it, was this INDU. INDU here was on the radar for momentum continuation. Is really like the oil names. This is just a full squeeze stock. I don't know if anybody knows anything actually about this company, if it's actually any good or not. But look what this thing did in the past on some of these occasions. So thinking with oil giving a move today that they could squeeze the heck out of this IND if the volume's coming in. Totally missed it at the open with my computer freezing. But I bought off of this tail, which I called out, and then caught this move higher. So, still ended up making good money on it, but probably not as much as I would have otherwise, or been as heavy as I would have otherwise. Matt brought up this HLX. HLX was looking at, $4.20. Really, there was liquidity at $4.18 that I wanted to take, and I missed it. And I got partial. I got a partial for less than a quarter, a little bit less than a quarter of the amount of stock that I wanted to buy in this thing. And then my thing froze. And by the time I retyped it back up, it was 436. I ended up chasing a little price, which I don't like to do, but I really kind of wanted a bigger position than I had in it. So I took a little bit off at $4.39, right as I was able to get back into my computer, and then I kind of bought most of that same core position that I actually wanted into this pullback in low 432. I was able to get a little bit more stock, but just frustrating to not get the price that I really wanted on this, because this, even though it's a cheapie, if you're able to nab that liquidity, it was at $4.18, and it was gone very, very fast. This was a sick opening move for a $4 stock. So this is a new swing for me. So Apache, INDO, HLX, all those worked fantastic as well. What did Oxy end up doing? Oxy, this is another one that I was not involved in. We talked about the inside day and up in Oxy. This was a momentum trade here. It opened up above it, so you really would buy versus yesterday's high, or buy versus the opening high. This looks like another one that you would have been able to get in for very small risk. Worked tremendously well. Another one that we spoke about was Halliburton. Halliburton through 30. Another phenomenal trade. All you gotta do is put a buy stop at your breakout level, and you take it on 21 cents worth of risk, 22 cents worth of risk, and within 15 minutes it's up $1.80. So just coming in real bullish on these oil names today. They totally paid if you're able to get stock. I made money in it, so I probably shouldn't be as grumpy as I am. I was able to make some money in these stocks, but I don't know. Just felt like I left a lot of money on the table with that computer freeze. So so that's kind of the energy space. The other spot I was looking at was to see if these growth names could catch a little bit of an oversold bounce today. And I was looking at that for a couple of reasons. One was the opening strength from yesterday. So yesterday there was a lot of opening strength. If you just go back to Roblox as an example, a lot of opening strength in this Roblox, how they went green super fast and looked like they wanted to make this pivot point here, but then the market totally failed. So I thought that, maybe, and I still felt even at the end of the day, the NASDAQ had like a 2.5%, 2.75% down day yesterday. And these growth names weren't on a percentage basis down like that bad. I was looking at names that were down 2%, down 4%. Usually when you have a, NASDAQ down almost 3% day, you're looking at most of those growth names down 7 to 11%. So even though it's still technically relatively weak compared to the market, I actually felt that was like a degree of relative strength, especially with how they traded off the open. So I was looking to see if these types of stocks, and I just typed up Roblox, even though it's not one that I traded, could give a bounce today, as potentially the dollar could pull back, just because the dollar's extension into this resistance, right? Just looking at BUP here into 29.20, big move here from 28 to the highest peak of resistance here yesterday, some extension. So I'm thinking, all right, if I can get this dollar to pull back a little bit, maybe I can get this TLT to bounce a little bit, which TLT did not close well, but TLT gave me the bounce I was looking for. The dollar kind of gave me the pullback I was looking for. I figured maybe some of these names that are 7 down days in a row, like a shop, could give a little bit of a bounce today. And they didn't. Early on in the day, they looked okay. You can look at Roblox I just had up. You can look at Shop. They did give bounces, but those bounces totally fizzled. Which, given that the dollar pulled back as much as it did, and the TLT bounce I know was faded, I thought that these would perform a little bit better today. They didn't. But the market didn't do anything. The market certainly didn't help. So at the end of the day today, it was all about energy. All about energy. And that setup was so money. You just had to be fast off the open. And there were so many opportunities that we discussed. Halliburton, Oxy, HLX, INDO, Apache, just so many of them worked out really well. and everything else kind of was out of play. These growth stocks, even though they tried to give a balance, like just still having the shop up here, it just became very out of play, just like the market was. If you look at these FANG names, these FANG stocks today, very out of play. Apple, super out of play. Amazon, super out of play. Google, all these things did absolutely nothing. But I think it's a great job that on a day when the market, like I started the meeting with, the SPY chart, it was just complete garbage, that we were able to just pinpoint the right spot where that relative strength was going to come in, have a focus on those energy stocks, and those trades worked remarkably well. So I think that's just a really, really good job. And I guess that's all I got for today's recap. So let's shoot over to questions. The first I'm seeing is from Chris, which I responded to a little bit with the message already, bringing up Alibaba. Yeah, you gotta like this tail if you're bullish. So this is a bearish pattern, and it broke to the downside today, but closed back above the level. So it's right into the ADMA, which always makes it a little bit tricky. But whenever you have a failed pattern, a lot of times that can become a catalyst to the other side. And to me, that makes sense. China is the only government out there that's still stimulating its economy. I think this name trig's very cheap from a fundamental perspective. Obviously, you have additional risks just with the Chinese government and delistings and things like that. But for the moment, at least, Alibaba seems like it's here to stay. So you got a false breakdown there in Alibaba. JD reported earnings. I remember looking at this JD in the morning meeting today and saying I wasn't going to trade it, even though this is a company that I really like also. I thought that the report looked solid. But they sold it all the way down. And look at this intraday price action in JD. I didn't trade it, but just, wow. And it was super, if you bring up the pre-market chart, it was up there when that report first came out. Yeah, look at this immediate uptick to like 59 plus. Dribbles down, and this is why I didn't want to be involved in it. I was like, this thing should be gapping up. Those numbers look great. And I remember we were doing the morning meeting, and it was like flat or down or whatever. And then they just wrecked this off the up. Just very, very sloppy price action in there. But at the end of the day, you got an interesting looking candle that kind of closed well with a big downside tail. So that's kind of your JD and Baba. I think that they look pretty decent on the failed breakdown aspect of it today. So let's see what they're able to do. Did Nordstrom just report earnings here after hours? Oof. Not good. Not 13%. Not good. INTU reported also. Earnings season, for all intents and purposes, is basically over at this point. We got a few names that are still kind of dribbling out. From Chingus, can you please speak a bit on trading odd number of round lots? I enter with 500 shares, but to cover my risk, I cannot sell at 250. So what's the best way to sell 100 and say 1 hour? I understand the question. So I try very hard to not trade odd number of round lots. So if you're a professional trader at T3, you're supposed to trade in full lots. You're not supposed to trade in partials, right? So everything is supposed to be divisible by 100 shares. So for me, it's not a hard rule, but it's been a general practice of mine for the majority of my career to trade even numbered lots. I almost never buy 500 shares, 700 shares, 900 shares, 1300 shares. I almost always buy in even numbers so I can sell 50% of 1-to-1 and get the risk covered. I'm not gonna say I never will take an odd lot like that, like not an odd lot, but an odd number round lot, like 500 shares. I'm not gonna say I never do it. The only time I'm ever really going to do that is if I'm given a lot of space risk. And then I probably would sell the 200, not the 300, like that 1-to-1. But when I'm taking that much space risk, it's almost like I'm planning on being able to add additional stock or find another stop loss or something like that anyway. So yeah, I mean, that's my answer. Don't trade if it's divisible by, basically if it's not an unnumbered lot like what you're saying. Get the even numbers. Elliot wishing me happy birthday. I appreciate it. I appreciate that very much. After covering risk of 1-to-1, I have trouble holding positions overnight. I get scared for a gap against me, and I don't feel comfortable holding the position. I end up selling on the same day, even though the stock has a potential of the daily chart. Any tips? Should I start with holding just smaller pieces overnight and then work my way out? Yeah, sure. So This is a great question. So this is where what I call my 1% rule comes into play. And 1% rule is really not a 1% rule. It's kind of I call it the 1% rule, but it's really more of a guideline. And the reason why it's a guideline is because for certain more volatile stocks, 1% is not enough. So basically, what my rule is that I will only keep a position overnight if I'm at least 1% in the money on it, and that is for the gap downs. Right? You can never know with certainty how the market's going to gap the next day. Obviously, you want to check and make sure you're not holding into an earnings report or a major news event, because then you could have the thing gap 15% against you the next day, like Nordstrom is potentially set to do for tomorrow. So, again, generally, I got this position. It's working out well in my favor. I want to see them at least, and again, sometimes it's not enough, 1% in the money in order to keep it overnight. Then if the entire market gaps down 1% tomorrow, which is generally a big gap, right? We don't see too many gaps. This year, 2022, has been a very volatile year, so maybe we've seen a few more this year. But typically, we don't see too many gaps that are in excess of 1% for the market. So then the only risk that you're taking overnight with your stock is more, of course, anything can happen overnight, God forbid, like a nuclear bomb goes off in Asia in the middle of the night or something like that. The market could open up down 10%, black swan type of event. But for the most part, you're going to be pretty safe as far as your market risk goes. And then, the only other concern is individual stock news coming out overnight. That stock that you just happen to hold, just happen to have a surprise analyst downgrade that there was no way you could have expected the next morning, and the thing's gapping down 3% on that, something like that. But look, I have certainly had things gap past my out and gap down more against me than I want them to. But generally, if you've got that profit cushion, you're keeping the position overnight in a win-win. For the most part, if you got, let's just say, a 2% profit cushion, you're keeping it overnight, think about how bad that gap down is going to have to be in order for your stock to gap down 2%. It's going to have to be pretty ruthless. And it's even only there that you're just giving back your profit and you're back to break even on the trade, or possibly even still in the money, depending on how much you're holding. Even if you held 50% overnight and you're 2% of the money, it gaps down 2%, you're break even. If you hold 20% overnight with a 2% profit cushion and it gaps down 2%, you're still making money on it. So, yeah, like what you're describing here, just make sure you have that profit cushion, and if you want, you'll sell a little bit more into the close. I do that all the time. I usually reduce position sizes into the close, especially if I have anything that's like kind of near a target where I know I'm going to take it. I'm planning on taking the stock off, in another 12 cents or whatever anyway. I might as well not keep, obviously depends on the stock, but I might as well not keep it overnight, take the overnight risk just to make an extra 12 cents. I liquidate that piece of stock in the close. So I usually do a good bit of liquidation into the close on, some of those things, just to make sure that I'm very comfortable with my overnight risk, what I have, my profit cushion, and then I'm in that win-win situation. And then it's really about reward maximization. At that point, if you're liquidating more stock into the close, I think that you are limiting reward more than you are locking in profit. And I think that and if it's a good-looking daily chart, better off giving the stock back, better off giving back 20% of your position than just liquidating the position entirely. Thank you for the question. Cool. Next, I'm seeing is from Paul on Google Daily Chart. Looks like a failed breakout of 118. Yeah. Okay. Yeah, that was that big level up here that we were looking at for a while, right? That like 119 area. I would consider it a failed breakout, yeah. But do you consider it to be a failed breakout? Why would I look to buy? It's a failed breakout in an amazing company, so that's not a great answer. But it's just back into the consolidation, right? It's not like I was buying. If this thing's 119, it's not like I'm looking. If the breakout's 119, it's not like I'm looking to buy, 118.50. At this point, there has been a fast move already. The stock dropped $10 $122 stock. It's Google. You know, it dropped 8% here in a matter of 4 days, kind of into the midpoint of a lot of price congestion. I am looking for an opportunity to have a snapback in a really good looking stock. So that's why I have some Google. I keep looking for a signal to get heavier. I'm building into it. I might still have this stock down at $110. I'm certainly light enough. That hasn't given me a signal to actually get heavier on it. So I probably have a little bit of a bullish bias towards the company is one thing. The technicals here, it's just extended the downside back into almost the midpoint of the range that it was at. So otherwise I totally agree with you. Failed breakout, got to be careful. Failed move comes a fast move. It really comes down to the market also, I think is a big portion of it. And like a lot of these names I'm trading, when I'm trading these FANG names, I'm trading them kind of in conjunction with the market. So I keep talking about this pullback in the market that we expected, right? We expected this pullback. We were saying it back here at highs. We are really overdue for a bigger 3 to 5% pullback. Well, that 3 to 5% pullback brings us into this area that we're at now. SPY 410 is a huge level. So if SPY 410 area is able to hold and the market recaptures that 415, then most likely, these Googles and these Amazons are participating in that bounce, and they're going to be able to pay me. If this market just was a complete and utter bear market rally, which I still don't think the technicals have totally proven to us or not yet. We know the fundamental market dynamic information kind of heavily indicates that this was primarily a short squeeze. But like I've been saying, the big signal here is on this pullback if buyers actually come back into the market or not. And I don't think we know the answer to that yet. So that's why I'm really kind of looking to see how the market reacts. It's a pretty big pullback in a small period of time for late August when there's not much going on. How is this 410 going to hold? And if so, if it is, like I'm saying, I should be looking at these bigger kind of market bounce backs also. Can I get a bounce back in Google from 114 or 113 to 118? Very, very possible. And the idea is to get paid on that if it presents itself, and of course to manage my risk if it doesn't. And at this point, for me personally, I'm just giving profit back, even though I liquidated the position entirely for some of these names. I'm still viewing it as almost the same trade as I was in previously, where I'm just kind of retaking my stock back to lower prices, and I'm locking in the difference as far as profit goes, and I'm in a win-win situation, and it's just going to be a matter of, do I add even more P&L onto my win-win situation, or do I give back some of the money that I've already made? So, yeah, appreciate the question there, Paul. From Bandit. Talked about a fast open with the energy stocks. Do you have any tips, strategies for dealing with the fast open when stocks just go vertical? Be prepared. Be prepared. Have hotkeys and be quick. This is why you got to have hotkeys. There's no way that you could have caught any more than like one of those trades off the open without hotkeys. Hotkeys are super important. You got to know what your levels are. If you wanted to be involved in those names, the second the market's opening, you're upticking Oxy and you're getting your stop in. You're putting your buy stop in Halliburton to be able to buy the break. You're buying the break in that HLX. It's probably not the ideal answer that you want to hear, but it's the true answer. You just got to be fast and be prepared. The preparation comes pre-market. I know I was prepared. I felt very prepared coming into today. That's why I got so frustrated when I had my computer issue. I was super prepared. I knew exactly what I wanted to focus on. I knew exactly what names I wanted to be in at exactly what prices. And then it was just about, being able to be there and press the button as the trigger actually occurred. And being able to be fast. Having a good trading software, having your hotkeys set up properly. That's really key to it. From Alex, wishing me a happy birthday. Appreciate it. Along with Chingis' question, when do you determine your one-to-one target to take off risk? Do you include commissions and fees or strictly cents on the chart? It's strictly cents. It's strictly cents with one small exception. So generally, if I'm risking 20 cents on the trade, the offer is going to be 20 cents up. So if I bought the stock at 50, my stop's at 1980, risking 20 cents, offer. Did I just say? Let me get my whole numbers correct. If I'm buying the stock at 50 and the stop's at 49.80, I got 20 cents worth of risk. I'm throwing the offer for half of my position at $50.20 of 1-to-1. The commissions are negligible, costs are negligible. If I get that kick and I get stopped out, I lost like a couple dollars in the trade. Like, as far as I'm concerned, it's break even. I didn't lose my risk. The only time that I will factor in commissions is if the risk that I'm taking is less than 10 cents. So if the risk I'm taking is less than 10 cents, I always want to try to make 10 cents as my 1-to-1. So for example, whereas let's think about it. Let's even be extreme and keep it simple. Let's say that you are taking $1 risk on something. Let's say that you've got a penny commission cost on it. So you're taking $1 risk. You're actually taking $1 risk in 1 cent. If you get your kick $1 in the money and then you get stopped out, it's going to be negligible. So that's one extreme. Let's say that you got 2 cents worth of risk on a trade, and you've got again, let's just say a commission of a penny. Just let's keep our numbers as simple as possible. Well, that actually makes it really 3 cents of risk or 4 cents of risk if you're talking about the fact that you have to buy and sell. And then obviously it depends if you took liquidity or added liquidity. All of a sudden, in that case where you're taking a trade with 2 cents worth of risk, you're actually doubling your risk. Whereas again, if you're taking $1 worth of risk, it's completely negligible. So the rule that I use to counter that is generally if I'm taking less than 10 cents worth of risk, I really do it with 9 cents. That's really where it is. If I'm taking less than 9 cents worth of risk, I want to be at least 9 cents in the money. Is how I counter that. So yeah, Alex, hopes that helps. That's kind of my rule for it. But I think that Zoom will break the previous low. Ooh, Zoom looks terrible. I don't know. It's very extended. So I think we need time to see how on the daily chart it handles this extension. You got stocks trading at $81, stocks ADMAs at $99. It's very extended here. I mean, Lowe's is not very far away. It's only $2 away. It could break that tomorrow just on continuation after today because the thing closed on Lowe's. But if the question is, do I expect real further downside follow through, not just maybe breaking Lowe's by a couple pennies? I would want to see what the thing looks like when the ADMA catches up. From Ramon, wishing me a happy birthday. I appreciate it. For covering risk, I've been trying to push it by a penny or two to cover fees. It didn't work. So yeah, just answered that exact question. I do it at 1-to-1 unless my risk is less than 9 cents. Hotkeys are an absolute necessity. From Paul here, Oxy this morning, I wanted to take the trade, but felt it was a bit extended on the 5-minute. I was looking for the ADMA to catch up. Yeah, it was extended because of the gap. How do you differentiate between needing to wait for the ADMA to catch up or just buying right away? Do you use or look at a percentage of gap? So what I'll usually do in this circumstance is basically take like 2 entries, or I start with one smaller entry where I'm giving a lot more space. Well, there's a couple ways to do it. There's a couple ways that I might do it, actually. It depends on the situation. It depends on my conviction. I might just take all my stock right away and utilize yesterday's high. And if I'm doing that, I have to recognize that this is a pure Momo trade. It's a pure momentum trade. It's 100% momentum, right? I, as a general rule, really dislike having my stop loss above the ADMA on the time frame that I'm looking at, because it means that I have a much higher probability of getting shaken out of a trade that works. And for me, as I've spoken about in the past, I like to use stop losses where I know my idea is wrong. And in this case, with it opening up the way it did, if I just bought whatever 70.75 with the stop loss at 70.38 and put on the 35 cents risk and got stopped out, I wouldn't actually know that the idea is wrong, because it could just be pulling back because of the extension, creates a very fast pivot, and then goes. We've all seen that. So I might do it though. I might do it again. That would be a pure momentum trade where the ADMA isn't equipped for my stop loss. What I sometimes might also do is I take a smaller amount of stock and I give it more room than I want to. I take a smaller amount of stock and I say, you know what, I'm giving it all the way to the gap fill. I think it's very unlikely that I will have to truly use the gap fill as my stop, but I might, and I have to be prepared for that. Most likely, I'm going to get an opening low or a pivot low that I'm going to actually be able to raise the stop to. But I can really only I have to always be prepared for the worst case scenario. I can really only take the amount of stock that I'll feel comfortable with should the worst case scenario occur. And the worst case scenario, even though it's a low probability, is basically just an opening straight red bar that fills the gap and I get stopped out. So scenario number one, take a lot more stock, pure momentum, potentially get shaken out of a trade that works without me. Scenario number two, I get much less stock, which means I'm going to make much less, but I'm giving it a lot of room. I know I'm only getting stopped out of this trade if the idea is really wrong. Potential number three, and this is my real preference, is to combine the two. To allocate some risk towards really giving it the space and allocate some risk where I'm going to be able to take a lot more stock and keep it super tight for momentum. And then if I get shaken out of the momentum stock, fine. I still have the other stock. I'm given more space. I can look for a potential reentry if I get a new trade set up. If I get that, tail bottom into the ADMA catches up, it goes sideways, it full flags, whatever the situation is. I can look to be able to re-enter more stock again for momentum. If I get shaken out and miss it entirely, at least I have some stock. And then the ideal situation is this, where it just goes. And then I don't have as much stock as the 100% pure momentum, but I've got more than if I'm giving it all the way down to lows. It's kind of a happy medium between the two. So that's really what I tend to do and prefer to do in these situations as far as finding kind of the right stop loss. And I think those are your different options. And I fully support the pure momentum trade idea there. You just need to know yourself as a trader. And I know myself as a trader, I really struggle personally when I get stopped out of something and I don't know that the trade itself actually failed. I really struggle with that. It tends to make me make mistakes. So I'm hesitant trading right off the open with the same issue that Bandit had. I wait for confirmation and then it's too late. I don't want to chase. Yeah, you have to anticipate, not react. It's one of my favorite sayings in trading that I stole from Mark Sperling. You have to anticipate that the move is going to occur, not react after the fact that it's going to occur. And that's the key to trading the open. The open's my favorite time to do. Like, what the market did today, and that's part of the reason why I was so frustrated, this is my favorite type of trade. The trades that happen in, like, the first, 20 seconds of the open, basically, 30 seconds of the open, where you have to be fast and skilled in order to get stock. And I know that a lot of people aren't going to be able to get this really good stock that I have. That's what makes the trade work out so well. I have found over the course of my career, the best trades give you one opportunity to get stock, and then you never get that price, you never get that opportunity again. And this is these types of names are the perfect example of it. You were ready to buy Halliburton through 30 or not. You were ready to buy Oxy off the open versus yesterday's high or not. You were ready to get that HXL from 418 or 420 the second, 318 or 320, 418 or 420 the second that thing opened or not. Those are the best risk reward trades for when they work out. And sometimes they don't work out, so you also have to be quick to get your stop loss in. But when they work, that's like the best risk reward. This INDO. Oh my gosh, if you could have just gotten stock in this thing off the open, like versus yesterday's high or whatever, Like the move on this was incredible, and this gave that second chance. I was nervous on the second chance. I get nervous too, but that one worked out really well also. Um, and then again, honestly, in this case, chasing today like even worked out a little bit. Off of like looking at Oxy, like you could have chased really late off of even this pattern and still made some money for yourself. That's usually not going to really pay you though. Like it's not going to pay you well. It's not going to pay you consistently. These best trades are the ones where like it's there, the open, it's triggering. You're anticipating. You know what that Halliburton daily chart looks like. You know it's breaking. You know that there's good layers of probability that's there. You know the volume is there. You're in or you're not through 30. If you're buying above 30 in this thing, you're just putting yourself in a real bad risk reward spot. Even if you're taking like this inside 5 as a trade, the risk here is tight, but you're just so late on the trade by that point. There's no real follow through. There's no way you're gonna capture this inside 5 and up in Halliburton and be able to hold this throughout the day. Because if you got stock in 30 today, you should be swinging it, I think. Do I place market orders at the open? I will place buy stops at the open. I will sometimes cross the spread with limit orders, and I will use my uptick key. I honestly don't really use market orders at all anymore, except for on stops to get me out of, except for stops. I honestly really don't use like market buy. I have them on my hotkeys. I pretty much never use them. I use the uptick and downtick key though to take liquidity. Or sometimes I just cross the spread on limit orders. Get stop right away, which is also just taking liquidity, and if anything, it's more expensive or whatever. No problem. Micah, could you give an example of executing how at the open versus just using a buy stop for all your stock? I mean, that would be the way to do it, though. That's the way to do it with Halliburton. Just put a buy stop at 30. 30's a level. That's the right way to trade it, in my opinion. You could stare at it, and the second it ticks 30, take the offer. Why do that? Just throw a buy stop in at 30. Throw a buy stop in at 30, so you don't have to worry about it, and then type up Oxy and enter Oxy. That's how you enter multiple at the open at the same time. And then you see in your orders window, oh wow, I'm in Halliburton. Let me type that up real quick. Get my stop loss in and get my offer out for my 1-to-1. Bam, stop loss is in, offers out. I'm back to Oxy. My stop loss is in, my offer's out. I'm over to HXL. Like that fast. And I don't feel like I don't need to watch these tick by tick. Right? Like I know how the trade is working versus how the trade is not working, even though I'm constantly typing them up and I'm typing back to Halliburton, I'm typing back to Oxy, and I'm typing back to as I'm in all these names. I don't need to be watching them tick for tick. I will see that I'm getting filled to know where the stock is trading even. Yeah, so you have to know more or less know where your stop loss is going to be. In order to know how many shares you're putting like your buy stop in for, or how many shares you're just taking an offer for. So that's like the one thing. So what I'll do is, this opens up. It opens up very close to 30. I say the low here is 79 cents. I'm putting my stop in based on the 79-cent low, and then as I'm just like, I'm just like constantly typing up my, stocks that I'm looking at here, even as I'm trading them, and I work my way back to Halliburton, and I'm just real quick, okay, it's still the same low, it didn't trigger me in yet, like, whatever, let me type up like the next, I'm just constantly just blasting through these names and making sure that those numbers all still make sense. But then once I'm in it, and I have the right amount of tier size, then I almost don't really need to watch it that much. Stop loss is in, my offer's out. I'll know how well it's working when I see in my order window that I got stopped out or that my offer got filled. And that's probably actually really difficult for people to not watch the position that they just entered after they have their orders in. But honestly, it doesn't matter. Like, what are you watching for? What are you watching for? Obviously you're getting information if you can watch it, but like, you shouldn't change your game plan. You're already in the position. You already have your risk out. You already have your offer out. You shouldn't be changing the game plan after the fact. So does watching the position really help you at that point? Not really. You know, watching it tick for tick at least. So yeah, I hope that helps, man. Cool. All right, gang. Guess we'll call it here. I'm still doing this thing that I started last summer where I go to these, try to go to all different restaurants in New York of all different, like authentic restaurants from different countries. I just found out like that the only authentic Burmese restaurant is right near my apartment. Looks like a little hole in the wall. I think I'm gonna hit that with wifey in a little bit to knock Myanmar off the checklist. Got like 60 countries knocked off or something like that at this point. It's going pretty good. So that's what I'm doing tonight. Relatively taking it easy. I've never. It's just kind of embarrassing. I've never seen the movie The Shining. I got into like a big conversation with somebody about it. So I might try it. I love Mediterranean food, but which country? Like that's what I'm saying. I'm trying to hit all the specific countries. So I got Italy, I got Greece, I got Turkey, I got Morocco, I got Syria, I got Israel, I got like all them knocked off already. But it gets hard. Like try to find like an authentic Tunisian restaurant. You know, it starts getting hard when you look for some of the other outside the box countries a little bit. So if anybody has a restaurant for a Tunisian restaurant, a recommendation for a Tunisian restaurant, I haven't been able to find one of those yet, or like a Libyan restaurant. But yeah, I love Mediterranean food broadly. All right, gang. Thanks for bearing with me today. Have I been to New Haven for pizza? New Haven, Connecticut? No, but you don't want to get me going on pizza. Start talking about pizza. It's like I'm a real New Yorker when it comes to my pizza. New York pizza is the pizza. I will check it out. I will check it out. Don't give me any of this Chicago pizza or New Haven pizza or Alaskan pizza. It's a genuine slice of cheese, and that's how you measure your pizza places. By the way, you measure it based on their cheese slice, and then you know if this is legit or not. Raised on 6th Ave, I've had it. Big fan of Stromboli's on St. Mark's and 1st Avenue. But it depends who is there making the pizza. Everybody used to be good. Now they've got like one new person. It's not that great. New Jersey? I don't know. New Jersey pizza? I'm sure it's like almost as good. Egyptian restaurant in the Jewish neighborhood in New York that has awesome pizza. That's wild. Thanks, Rich. I appreciate it. All right, gang. We'll wrap it up. Have a great night, everybody. See you all tomorrow.